Welcome back to the Max Your Dash podcast. Thank you for listening, liking, and sharing. My name is Steve. I'm here with my co-hosts Nate and Mark. We're here. It's been a wild ride these last couple days. What's today? April 11th. It's been crazy.
It's a crazy time to be a financial advisor.
It's a crazy time to be an investor. Well, actually, no. If you're an investor, this is a crazy time, but you're not looking.
It's definitely way crazier for an advisor than probably anybody right now.
What a time to be a buyer.
The swings.
Yeah. What a time to be a buyer. What are you buying?
Me? You don't want to know.
Yeah, what are you buying? Eventually, we're gonna be like, this is a pull up everyone's individual portfolio. Eventually, we could do that.
The other day, I had a position up 50% and I was still down 70%.
Listen to this. If you're
make that math make sense.
By the way, this is not direct advice. Mark's just doing it for fun.
Yes, those are fun trading. It's not so fun though.
We don't have anything specific to talk about. This is, like I said, so this is April 11th. The last episode before this one, we talked about the stock market. And then literally as soon as we put it out, we had a pretty crazy couple of days to a week.
Wasn't it the worst day down ever?
That
and
first
the
day,
highest
last
day
Friday or last
ever?
Thursday?
Like the 2 days, you're talking about Thursday, Friday?
Yeah.
I think the combination of the two were like one of the worst ever.
Like I think in the last week,
yeah,
we've had the worst down day ever and the best up day ever.
For all, not like for one individual index, but when you look at all three together.
Dude, yesterday, that rally day was crazy.
Yeah.
It's like that was literally the perfect example of why timing the market just doesn't work.
No.
Just like, how could you ever? It just doesn't make any sense.
And then you're sitting there on cash on the up day, didn't get in. And
then you try to get
that
on.
night, you're like,
yes!
dude, I missed it.
Yeah. Imagine you missed it twice. You missed buying what's the worst thing that could have happened is if you sold out at that crazy amount on Friday or Thursday, you didn't buy back in, then missed the upturn, and then bought on the next day, which was yesterday, which went back down.
Big too.
That is that is what hurts. That's touching the soap.
And the VIX had its biggest volatility crash in history.
Mark, no one knows what the VIX is, dude.
Volatility index.
It was literally yesterday. It was yesterday's?
A day ago, yeah.
What was I gonna say? Shit, I forget. Keep going, Mark.
It's crazy. Yeah, so we're essentially just going to be, it's going to be more conversational. We wanted to just make sure that our thoughts are on there, what's going on current, because we just came out with an episode, but that was before the craziness of the tariffs got announced and then the crazy, crazy market volatility. Like this year it's been volatile, but not as crazy as the last week.
Mm-hmm. So let's recap where we're at.
Yeah, where are we at?
So S&P 500 as of this morning was down just over 10% year to date, but it's down more than that from highs or
yeah. Dude, last Friday, the week to date for the S&P 500 was minus 9% just last week in just 1 week.
But so if we're just thinking year to date numbers, S&P is down just over 10. Nasdaq was down like 15 year to date. Again, bigger if you're looking at it from the all-time highs. So, I mean, what's going on?
What is going on, dude? How often do you guys go on X during this? I do it mostly. I'm like not trying to keep up on stuff. I'm doing it for the memes because I think it's crazy to see either someone panicking because the sky is falling or someone being like, "You're an idiot. The sky isn't falling." Yeah. It's just hilarious to see people go back and forth. And there's good stuff. I actually have some tweets that I want to go through with you guys that I think would be funny to go through. But
a couple other stats though before we dive into that. So S&P's down bigly, Nasdaq's down bigly, small caps are down in bear market territory, down more than 20% year to date. But then you've got bonds positive. Year to date?
That already changed.
They're negative now?
They're probably still positive.
They're still positive year to date.
But the 10-year has skyrocketed.
They have.
Yeah.
But I think it's still positive year to date. And international is still flat or maybe a little bit positive year to date. Yep. So you have some things holding up the portfolio if you're diversified.
Yep.
Which is something we should talk about a little bit
down
today.
A little bit now.
Okay, so that's where we're at as of right now. You guys follow us on Instagram if you don't, at maxyourdash because we literally daily have been tracking this stuff with cool stats, things like just our thoughts on it. If you want to track it literally day to day, at least for when it's crazy like this. Yep. But literally last Friday, last Thursday, Friday, it was insane down, like -9. It was down 9%. Then Monday or Tuesday this week, it wasn't great. And then Wednesday, it was up like 9%.
Double digits in a day.
And then yesterday it went back down. It's really crazy. The swings are nuts.
So
you literally commented saying this is like the craziest week of being a financial advisor you've ever had.
Yeah, I mean, I've been doing this business for 16 years. Craziest week of my life. I started in the 2008, 2009. That was my first year. And this feels crazier than that from what I can remember.
Really?
And the elephant in the room is Trump, tariffs, politics are playing a big role in this.
Well, I don't really know if I love how it was handled on Wednesday either. It was a little annoying.
What do you mean? I don't know what you mean.
So President Trump tweeted out in the morning, buy. And then 2 hours later said there's a 90-day pause on tariffs.
Yeah.
2 hours later, it said Charles Schwab made $11 billion or whatever the hell it was in one day. The politics behind it don't look good.
Yeah.
But
They're never going to look good.
Never going to look good. I think it's interesting that we always say, like, block out the noise, and then we talk about stuff like that. Like, our clients and investors should not even be looking at that, which is crazy. But it's like...
But it's just too interesting.
Well, it's all in your face.
Yeah.
yeah.
We got to think in decades.
Got to think in decades.
Not days.
That's probably why this feels crazier than 08.
So what are you guys thinking
Like, I
from...
didn't know
it's
what
the
was going
politics.
on. Yeah.
What are you guys thinking from a recession side of stuff? JP Morgan, this is the big thing, is they said it was... I don't know if that changed, but they said
It did
60
change.
to
When they
what?
announced the
45.
pause.
How do you go from... Like, see, that's how you know the metric. JP Morgan announced 60% chance of a recession, and they changed to 45%. Like, how do you take that seriously if they change it like that?
And they're always wrong. Not JP Morgan, but these like consensus things.
Yes.
Like, remember we used to always pay attention to, like, at the beginning of the calendar year, what all the major banks will have for forecasting of where the S&P 500 will finish this year. And they're never even close to right.
I was on a market call on Wednesday when all of this was happening. And Brian Westbury, who's really good from First Trust, he's like, I think we're going to fall quite a bit further. We're at 5,000. We're at 5,000 during the call. Think it's going to fall quite a bit further. Think we finished the year at 5,200. By the end of the day, we were over 5,300.
It's crazy.
It was just absolutely wild.
Yeah. Why do you think they even try to predict where it's going to end the year? Like,
That's what they get paid to do.
Yeah, I was about to say, they got to pay an analyst to do something.
Yeah.
This is okay, guys.
It's all models. Though.
Regardless.
It's like interest rates, the cash flow models that they can then create year-end forecast for. But the models have not been reliable.
Well, we're smart.
Should we talk at all about the dire wolves?
What's that?
Did you see that?
You didn't see that? Lab created dire wolves.
From Game of Thrones?
Back
someone was hugging
animals.
one, right? Elon Musk. Someone hugged a dire wolf. Who was it? It was the ChatGPT guy, maybe. I saw that.
Yeah.
Someone was hugging one.
Yeah, one of the co-founders is like some of these big.
Dude, I want a dire wolf.
But does this mean dinosaurs are coming back?
I guess they could.
Wait,
Jurassic Park could be a real
How much
thing.
would you pay for a ticket to Jurassic Park if it was real?
None. You ever seen the movies?
Dude, no, you
Always
would.
ends in
You're
disaster.
weird with that
I'm
shit.
pretty sure I'd pay $25,000 a ticket.
They always end in a
What?
disaster. The dinosaurs
They always eat you. Yeah. And the wall. Yeah, I don't like that. Okay, guys, we're never going to predict. We're not going to try to predict if there's going to be a recession, but what we will do is tell you.
going to be dinosaurs.
No, we're predicting that. We are going to tell you how to recession-proof your finances here and now.
Yes.
How do you recession-proof your finances? I'll go first. First thing, emergency fund.
Okay.
You guys hate the basic.
Because it's your go-to every time.
Well,
I love it, dude. I love it.
I just couldn't because you want to talk about the alternative minimum tax for people with trust. Like no one cares about that.
Whatever, dude.
Right now, everyone wants to know about how do you recession-proof your finances.
Yes, recession-proof your finances. Keep going.
Okay. Now, the only reason you should be afraid of a recession, the only reason has nothing to do with the stock market. Has nothing to do with, it should be if you're going to lose your job. Mm-hmm. How do you recession-proof your job? Nate, this
Add
is you.
a lot of value.
Yeah.
Wake up every day and say, how can I add value to my company today? And then go do that.
Yeah. But right now, what do you do?
That.
But probably get your resume.
Maybe work for a company based in the U.S. that buys everything in the U.S. That seems recession-proof right now.
This is like...
What? You asked a question. You want to? I mean...
my answer to how to recession-proof your finances would be stop paying attention to your investment portfolio.
Yeah.
Stop looking at it. Don't touch it.
Do people think...
Dude, you have like at two extremes right now I'm experiencing with clients. you've got the extreme of people. It's actually, and it's funny because it is definitely political. If you love Trump, you're telling me, how can I buy more aggressive stuff right now? Because I think I'm going to make a killing. Yeah. If you hate Trump, you're doing the opposite. Both of you are wrong. This is just discipline. Stay the course. Yeah. Like, what are we doing here?
Yeah.
Yep. What are we doing?
Stay the course, long term. It's like the most simple advice, and it's everywhere. So I'm surprised, but the human behavior, that's what cuts into it. It's tough.
Yep.
Okay. Anything?
We got the statistic played true that the best days often occur within 14 days of the worst days.
Oh, yeah.
That happened.
That happened.
If the best days are next to the worst days, do you think you should try to time the market?
All right. Let's start a poly market. Did the best day of the market this year already happen?
Yes. Oh, are you saying, do we? Yeah. Dude, that day was crazy.
If we get another 12% move up on the Nasdaq this year, that would be wild.
Wouldn't that be wild?
Oh, that would be crazy. Hey,
if we have another like big sell off, I bet it could beat it.
This market
in 83 days or 85 days, whatever it is. Tariff pause ends.
Oh, wait, it's that long?
90-day pause.
Dude, this is when I wish that you guys were more active on X as like actual creators, because I would legit subscribe to your stuff of you, because you would make some funny tweets about the market.
We should start doing
Dude,
that.
There's like this one guy, you can see Michael Gayed. I mean, there's so many people.
CFA.
He literally just tweets nonstop BS and like crazy tweets about the market, and you could just do that, but you're just like worried about how you would look.
I'm not. I wouldn't say I'm worried about how I look, but I don't really know how to like post anything other than words. Like if there needs to be like a visual with it. Like I'm not.
Bro, he tweets that stuff. Yeah, but it's just okay. Regardless, that's beside.
You want me to start tweeting more? Is that what you're saying? All right, I'll start tweeting more.
This is the thing. Okay, so we talked about recession-proof your finances. The bigger one is try to have no high interest rate debt and have an emergency fund. That's the big thing. And track your budget. Control the things you can control. That's how you recession-proof your
Probably
your
not a good time to be making all kinds of luxury purchases.
Yeah. I saw this question. I wanted to get your.
Is already doing that. If with inflation coming down, that seems like a little bit of a signal there's been a slowdown in buying, which is good. We needed it.
I want to get your guys' take on this question, because this might be something that people think about. If the economy goes into the recession, is it better to have zero debt or 10K in cash? You could choose one.
You're gonna hate. I would like to have a little more context, because like if I knew I had an okay job, I'd rather have the cash, because I'd be buying investments.
Well, this guy, the context is he's about to settle a car accident and could get about 11K. He's got 9.5K in debt. Does he take the 11K and put it in savings or pay off the debt?
Do a little half and half. Balanced approach.
And that's why your hourly rate's $250.
Yeah, do a little balanced approach.
Half and half.
I think that's what's on the mind of most people right now is like they're scared of a recession, and what should they prioritize? That's the thing. Okay.
I mean, it's so hard once you're in it, it's too late to prepare. Like you can't build up a war chest of cash right now if you think we're in a recession. Like it's just too late. So you should be doing this stuff.
Yeah, but you could do some damage in 3 months, 90 days.
Yeah, sure. But it's just like the real answer is you should have been preparing ahead of time to be ready to buy.
So you're screwed.
Have an emergency fund, and then on top of that, have been building up cash to deploy.
Right.
Yeah.
All right. Here's some
other opportunities I can think of is like this would be Roth conversion time. Get your IRAs converted over. That's a good way to take advantage of this.
Okay.
If you were already someone doing that.
Dude, can you get closer to the mic? I mean, I know we bought new ones, but you still got to be closer. Mark is literally like always back here, dude.
Let's get him a.
Dude, we got to get one that clips right here for this guy. I mean, what are you doing?
I want a nice reclining chair, and then the mic is just
like it's not picking up what you're saying right now.
Yes, it is, dude.
Bro. No, because now these
fantastic.
mics are a lot better. They probably cut out unless you're closer.
You want to bet on it that just picked it
up?
up?
No, I don't. I'm just saying. Okay. Do you guys?
Dude, can we get you a coffee holder?
Okay. This is I think is. Do you guys know that like thing on FinTwit about Jim Cramer, like the opposite of everything he does? Yeah. Like, what do you guys think about that? So wait, this is what he tweeted. This is like recent. I don't know what day this was, but he said the spectacular stock market rebound came with a lack of any real conviction, as a look beneath the surface reveals aggressive short covering. Dude, and then like anytime this guy tweets, it's just the comments below are saying, I'm doing the opposite of this. Or like, it's
so like, does he manage money for anyone? Or is he just
is he an asset manager? Or is he just a Dave Ramsey type?
He's just a personality, a TV personality.
I want to know, like, how does he do? Like, how does he do for himself, his own
Oh,
portfolio?
great. Well, dude, he's like one of the biggest personalities in.
Dude,
I remember when I was
like every time though.
When I was in college,
it's crazy. It's crazy. So either he's doing the opposite of what he says.
Dude, that's so.
Dude, he's been doing it a long time.
Yeah.
When I was in college at Fisher, I remember my buddies and I, like, because we were in finance classes, like, we would watch him on TV, and everyone thought that he was like the guru.
Yeah, he's awesome to watch on TV. He's funny, but dude, it's true. Like, if you look at when he posted
Inverse Kramer.
Monday was supposed to be Black
an inverse
Monday.
Kramer ETF.
Yeah, so Monday was supposed to be Black Monday, which was like what, down 30%.
How do you think your portfolio would do if you had an inverse Kramer ETF and a Nancy Pelosi ETF?
Wow. An insider trading ETF.
Do you guys know this guy, Dan Niles? I don't know. I saw this. This is cool. He said during the recent sell-off, this was the 9th. I don't know what day that was. Was that Wednesday?
2 days ago, yeah.
Which was the rally day. Mm-hmm. During the recent sell-off, 65% of the 17 technical metrics I cared about the most signaled oversold. Historically, about 48% is what is needed to be statistically near a tradable short-term bottom in the stock market. This is way more technical than obviously anyone needs to get. But I think the sentiment there is important, is like being oversold, because people were like freaking out and it was very emotional over the last week.
Yep. I saw something else about that, the oversold. I can find it.
But like, look what happened after things felt like it was oversold.
It was, oh, come on. Where'd he go?
Isn't it crazy to think about how, like, did you guys see like how much cash Warren Buffett had been stockpiling over the last year or so?
Yeah.
And now imagine sitting in that seat.
Well, when did he buy, do you think?
I bet you he's buying.
Do you think
now.
he bought correctly?
He seems to have an edge. The guy's done pretty well.
Dude, I love making jokes like that. Could you imagine if like he somehow got on this podcast? He never does interviews.
Let's
does
get
he?
him on. We could probably, there's probably like a voice AI that we could get to act like Warren Buffett.
Yeah.
And come on the pod.
Dude, I feel like you would kill a dinner with Warren Buffett.
I would love it.
Are you looking for that?
I can't find it.
Okay, so what are you guys telling clients right now? Today is April 11th. I mean, we pretty much know nothing except for what's going on with tariffs and like how the emotions have been in the market. But what are you guys telling clients right now?
So we have a wide range of clientele. So we've got, the young emerging professionals, and then mid-career people, and then there's the retirees. On the retiree side of things, because those are the people who have a lot of wealth, and so they're really concerned about this. It's actually kind of interesting to look at their portfolios right now, because we obviously believe in diversification. We're holding bonds. We're holding international. Yes, we have equities too, but their portfolios are not down that bad.
Right.
And that's like the big talking point I've been bringing up, is that diversification is back and it's actually working. In 2022, on the calendar year, you were down double digits in bonds and down double digits in stocks in the same year. There was no place to go. Wasn't it like was it like oil was the only thing that made money in 2022?
Oil and cash.
Yeah. So like right now, for that segment of the population, they're not really, in our world, they're not beat up that bad. But for the younger people, it's all about buy.
Yep. Unfortunately, that's not where all the money is, but
Right.
I found it. Only 6% of stocks in the S&P 500 closed above their 50-day moving average today, a reading more oversold than 98% of historical data points. That's pretty bad.
98%?
Yeah, we're more oversold than 98% of historical data points.
You hear that? What do you think you should do then?
Sounds like we should be buying. I mean, everything right now. 1, 2, 3, 4, 5
but Mark,
years later.
This time is different.
If this time is not different, history tells us that we're going to end up ahead in 1 year, 2 years, 3 years, 4 years, and 5 years.
I've actually been
with
pretty.
above average returns.
Now we obviously have a very our slice of the people we work with are hopefully trained.
Mm-hmm.
I've been very impressed with people. Like everyone for the most part is like, I want to buy more. I want to
kind of for
I got
like
10 grand here, 20
sad
grand.
reasons though, isn't it? Like this is the third time we've experienced this in 5 years.
What's so sad
It's
about it?
normal.
Well, it's just like people are conditioned now to just to just beat up. They're like, oh, this is normal. We get beat up every year.
But what's
Well, I guess
interesting
it's
about
smarter,
that is the
but-
5-year returns are crazy.
Yeah.
You're up 100%.
Yep.
in the
You're
last
actually a
5
lot
years.
more empathetic than I thought you were. Remember our conversation the other day about, we're not going to get into it.
Me?
But, well, you would think
Let's get
like on the
Lindsay-
outside
let's get
looking in,
Lindsay
the
on the
people
pod.
that know me and you who would say is the more empathetic one. And it might be you from what you've said. I mean, you literally were like, the American dream, these people. And I was like, I don't care.
Oh yeah, that's true. I forgot about that.
Hmm.
Yeah, I don't know. I feel for people.
Yeah. You would probably call Marky.
I'll talk you through
Okay,
it.
what do you guys say? Okay, so you kind of said it. What are you telling clients right now?
So like with the retirees, you're okay.
Yep.
With younger investors, you're lucky. You got an incredible opportunity to buy into really good companies because like we're talking about the market being down, Nasdaq being down 15 on the year,
Right.
S&P down 10. How about the Mag 7 being down like 30%?
Huge.
Like those companies are all of a sudden bad. The
Yeah.
Magnificent Seven's bad now.
Yeah.
I'm not buying it. I think that that's really what to say.
Just a
there.
great buying opportunity.
Great buying opportunity if you're young.
Yep. And even our older investors are taking advantage of it. We just did a rebalance on Friday, which sold bonds, bought equities, without having to even add risk to the portfolio. It just got it back to where it was supposed to be.
This whole thing should really just reinforce the fact to you, though, of how important it is to have a plan. Like, if you have a plan proactively and something like this happens, which it always will, especially if you're a young investor, newsflash, this is going to happen 15, 20 more times over the next X amount of years. Mm-hmm. But if you have a plan, not only can you feel less stressed about this, but you can capitalize on it as opposed to having to be reactive. So the ones who do have a plan, like our clients, are feeling really good right now, probably. Like you said, like I feel like at least they're very trained and they know what's going on and they feel good about it. Mm-hmm. And for those of you out there who don't have a plan, or like if you have a plan, this is just like, it's easier to capitalize off of and you're not going to lose any sleep.
Yeah. This is a good time to bring up the famous Del Bar study that goes on annually where they measure investor performance compared to the market. And it's always like the same story. Investors get like half the return as the market. These are the times why that happens. Mm-hmm. This is when people make the big mistakes, is this type of volatility. And then you throw on top of that politics. There's probably, unfortunately, a lot of people that have gone to cash in the last week or so, and they're going to have no clue when to get back in, and they're going to miss it. It's gone before you know it. And that's one thing too. I've been wanting to go back and like study volatility, like internet, not pre-internet necessarily, but pre-social media and stuff like that. Like it just feels like things happen way faster now than they did. But maybe I'm wrong. But it has to be the case, right? Like you used to literally read the Wall Street Journal newspaper to find out what happened with stocks yesterday, let alone.
You can turn that into a good thing. It's hopefully teaching investors to not try to time the market, stay in the market, right? Hopefully people are learning from that because things can change so quickly.
Yeah.
Mm-hmm. This is impossible. Who could have? We had some kind of theories that that he's trying to drive down the 10-year. There's a lot of stuff on the internet on that. Maybe that wasn't what he was doing at all.
And you have no clue.
Right. It seemed like it. It seemed like he was trying to drive down the 10-year to refinance that, which makes sense. But all of our debt is in 10 years. We have other rates that need to fall as well. All the short-term treasuries need to fall as well. So maybe that was never a thing. And this was something he was planning on doing. Let's see who tries to retaliate. One country did, and then he drives a truck right through the middle of his tariff plan and pauses everything. And look at that.
I'm just like,
Did I lose you? Was that boring?
Oh, it's just like I can't imagine, like, because we do these things coming from being financial advisors, and like we consume this all the time. there's no financial literacy or education for the normal person. They have to go out there and seek it themselves. So think about being like a 30-year-old with a family and having no financial literacy experience living through this. Like, it may seem easy for us to navigate this stuff, but think about how crazy it is. Yeah. It's wild.
Yeah. Especially if you don't work with an advisor and you're older too, and now you've got like that. The swing is like $200,000.
Dude, I love when we plug but you're done if you work with an advisor, especially then. Like, we plug the advisor out.
Hey, we're here to hold people's hands. It's a big part of the value.
Wait, what was I just gonna ask? This is actually, if this should be your answer. If you ever listen to this episode. If you ever listen to this kind of episode and we're telling you to sell, do you know what would have to happen for us to get on here and be like, emergency sell everything?
Oh, man.
I mean, there would have to be lizard people running around. Like, there would have. So that should give you peace of mind. Like, no advisor is getting on there, getting on any type of.
Do you think that gives them peace of mind, or do you think that creates like almost
like it's peace of mind, right?
Bias.
Do you think that makes people think like, you guys just always say don't sell?
Yeah.
We will never tell you to sell.
There's not a data point that tells you to ever sell.
Well,
there's
yet.
Right, but like his history tells you should never sell. You should keep buying.
Because like, if it's down 90%, why would you sell anyway? Like, there's no point. You got nothing. You might as well just keep it.
Like, the more recent shocking data that I think over the past year or so has come out is that the long-term returns when you buy at new highs is better than when you try to time the market at all, right? So like, or buying at lows.
So if you just bought at the all-time high and didn't try to time the bottom, you're gonna have
superior returns.
Right. So it just
tells you should always be buying
and never sell. You're gonna always be okay.
Yeah.
Just literally pretend the sell button on your brokerage account doesn't exist and you win, by the way.
Yeah. I think part of that though, Steve, is because you can't. No one knows when the bottom is until afterwards. So it just tells you that there's not timing the market is pointless. There's no data that supports that it works at all. I'm sure someone has the lucky data out there. It clearly seems like Congress has an edge, but don't
time the market, because by the way, if we could time the market, probably wouldn't be on this podcast. Dude, think about it. Do you think the average investor like thinks there's people out there that like there's people out there like hedge fund, like they hear that word and they're like, oh, this person's doing something different?
100%. I think a lot of our clients think that we time the market.
No,
we don't time the market.
No.
All right.
Anything else? Q1 is in the books. It's a wild ride. I can't wait to see where we're sitting in
when we do
around Christmas of this year.
Christmas? That's crazy.
Want to do a prediction? Like the consensus?
Yeah, go ahead. What do you think?
500?
You think we're gonna be sideways, up or down for the? What do you want to say? Do you want to do yearly, or the year to date, or from here?
Let's just say, so year to date, the S&P 500 is down 10.68% right now, as of April 11th. It's at 5,253.62. My prediction is,
I want to be right, so I'm just going to choose the safest option.
I think we go up from here.
I think so too. I think we finish the year slightly positive. Calendar year return.
What did we start the year at?
Really?
Yeah.
Oh my God. You must be listening to something.
So you think above 5,800?
Slightly positive?
Like maybe like 2%.
You got some cash you're trying to deploy or something? What's good? He's trying to move markets with that.
I'm not taking as bold of a call as that, but I think we're positive from here. I think we're above 5,250 at the end of the year.
I think the year-to-date return will be somewhere between down 9 to 11.
So you think we will have...
We'll be right here.
So if that's true, this calendar year would be the 13th time ever in the history of the stock market to have a negative calendar year return.
Yes, and then I think from here till 2035, a rocket ship. I'm the type of guy that I want to get all the
11-11, say a wish.
That always happens to you.
So
you want to get it out. Like, I'm the type of guy that wants to get it out of the way now. If we're going to have the bad returns, give me a down 30 year right now. And then next 15 years, let's have a golden age of robots.
I think that it's interesting, though, when you hear the stat, there's only been 12 calendar years ever that it's been negative. Tells you something important, which is prolonged negative returns.
Yeah.
like we as humans, we view things in years.
Mm-hmm.
Like the stock market does not typically have a prolonged period like that.
Yeah.
Like they don't think in calendar years. So
Well,
it's very hard
just
to
the
have
fact
that
really smart people are going to buy these really good companies. Like Warren Buffett says something along the lines of just find really good companies, understand the companies, and own them.
Mm-hmm.
Like people are going to be buying really good companies that have been beaten up right now. That's I think why you don't get those prolonged periods of time, because as soon as you see these indicators of, all right, Nvidia's down 50%, it's an amazing company, I'm buying it.
Mm-hmm.
So it's hard for it to stay down for too long because the stocks get too cheap.
Okay, last prediction. Are we in a recession by the end of the year?
I think we're in one right now.
Really?
What about you?
Isn't the jobs data like amazing though?
What is the
who knows? We
definition
don't
of a
go over
recession?
that. Yeah, we went over this a million times.
We don't know.
Just say yes or no.
We apparently didn't have a recession during COVID. So let's think about that.
Right.
Yeah.
They changed it. We
There's-
moved
yeah.
the goalposts.
Yeah. So I don't know. Who the hell knows? But
Okay.
maybe we're in right now. Maybe not.
All right.
I think about it from a job standpoint, and I don't
Yeah.
see people losing jobs.
Not yet.
everywhere.
No.
Yeah. Okay. Anything else?
I'm good.
All right, guys. Thank you for listening, watching the Max Your Dash podcast. We will catch you in the next one.
Securities and investment advisory services offered through Osaic Wealth Inc., member FINRA SIPC. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth.